Welcome to Advanced Target Taking Multiple Targets. So in this video, we're going to talk about how to take multiple targets using any strategy. We're going to talk about two different ways to do so. And in this video, we're only going to talk about this using two different positions. Personally, I've never used more than two different positions. So my multiple target taking consists of only two positions. And that's the only thing I can really shed a light on for you because it's the only thing I have experience doing. I don't necessarily trade with 3, 4, or 5 different positions in order to take multiple targets. As I said, the most I've ever used is 2. So in this video, we'll talk about taking 2 targets, how to do so, and the different ways that you can actually take multiple targets using a strategy. So first off, let's talk about how to take 2 different targets on a trade. Well, in order to take 2 different targets, you actually need to open 2 separate positions. So the reason I want to explain this is because I get questions very often asking how to take multiple targets, and that's the only way I've found to do so, is to open up 2 completely separate positions with a certain percentage of your account value. Let's say you're risking 2% per trade. That's the risk management plan you've come up with. If that's the case, then you want to open one position with 1% of your total account value at risk and another position with another 1% of your total account value at risk. This is going to give you a total of 2% risk, and you're going to have 2 separate positions open. That way you can take multiple targets. So now that we're done with that, let's go ahead and talk about the different ways to take multiple targets. Well, there are 2 main ways to take multiple targets. One is a fixed second target, and the second is a managed position. Now, the first thing I'm going to show you is the way I personally take targets for the pullback strategies and for the multiple target strategies that I use. In order to take targets for them, I manage the second part of the position. This is the way that I have found is most beneficial for my particular trading situation. That does not mean it's most beneficial for everyone. I'm in a very significant position, being able to be behind a computer as many hours as are necessary depending on the trades I'm in and that I need to manage. This is because I trade full time. If you are someone who currently has a job or has other obligations that keep you away from a computer, that keep you from being able to manage the position, then this may not be the best way for you. But this is what I'm going to share first, considering that this is the way I personally take targets when using multiple targets with a strategy. So in order to use multiple targets with a strategy, I manage the position on the way down for the second part of the position. Now, for the first position, if you'll look right here, it is exactly the same as what we went through with the pullback strategy. For the first position, I set a target at 1-to-1 risk reward based on my stop loss for the first position. Let's say I'm risking 2% of my total account value. What I would have here is 2 separate positions. This position would be 1% risk up to the stop loss. This position, 1% risk up to the stop loss. What I would do is open that position with a 1-to-1 risk reward based on the stop loss, just like with the regular pullback strategy. Then I would wait and see if this market hits our first target. If it hits the first target, then I immediately take the stop loss from the second position and move it to break even. So after the hit of that first target, something like this would happen, where I then no longer have this position on, taking off the first part of the position. My stop loss for the second position is now at break even. Now, with that being the case and my stop loss at break even, that means that now is the time for me to start managing this position on the way down to the second part of my targets. Now, what determines the second part of my targets? That's an important aspect of this multiple target taking technique. The second part of my targets are determined by daily levels of structure, multiple tested daily levels of structure. So let's zoom out to a daily chart. Here we are on a 1-day chart, and right here is where our trade is. So looking left, the first place that we see with multiply tested levels of structure on this daily chart is right here at our red line around 147.18. The reason we picked this level is because we have support bounce here, support bounce, and support bounce. With that being the case, we know this is a powerful level, and that's a place I want to be looking at for the second targets on this position based on the way I take 2 targets or the way I take multiple targets for these strategies. I'm looking for a major level of daily structure, and I'm managing the position down to that daily level. So now let's go back to the 4-hour chart, and we'll actually zoom all the way down to the hourly in just a second, just showing you guys yet again. Here we are on our entry. Our entry, by the way, guys, was this pullback strategy. I don't think I mentioned that yet, but as you can see, we make new lows, pull back by more than 2 candles, have a 1, 2, 3 engulfing pattern right here. So that's our entry, 1-to-1 hit, moved our stop loss to break even. Now what do we do? Well, now that we've done that, we've looked out on our daily chart. We see that we have this major structure level right here on our red line. We know that's a place we're going to be looking at for second targets. So now we have to manage the position down to that level. What do I mean by manage the position? Well, I actually go down to a smaller time frame. For me, that's a 1 hour chart. I'll take this market down to a 1 hour chart for the second part of this position to manage it. And in order to manage the position, I will be waiting for this first target to be hit. Once this first target is hit, I'm going to take a look back up at previous data, and the resistance level after the most previous level of structure that's been broken is where I want to put my stop loss for managing this position. Now, with that being the case, our break-even stop loss is actually in that same exact area, so I wouldn't be moving a stop loss yet. But in order to manage the position here on the hourly chart, as we break down into this low, I can't really move my stop loss. It has to stay at break even. But once we get this pullback and a break and close below this level of support, that's when I can manage the position and put a stop loss above this level of resistance by 1 ATR. Remember our ATR indicator up here? We're going to use that ATR indicator in the same exact way. Here we have 23 pips. We would be using a 20 pip stop loss above this level of resistance once we have a break of the level of support looking left. Now, in order to explain that a little bit more, I'm actually going to do this on a blank chart. So for taking these multiple targets, if we see we have a pullback strategy right here, let's say that's our entry. Our stop loss is here, our targets here, our entries right here. This market pushes down, hits our first target, then pulls up and pushes down. Once we break below this level of support, that's when we can look at this level of resistance and put a stop loss above it by our ATR rule. Then what we do to manage the position, let's say we have a daily level of major structure right here. We would wait for another pullback. We would then be waiting on this level of structure support to be broken again. As it gets broken and closed below, that's when we take a stop loss and put it above that previous resistance. We do the same thing all the way down, waiting on this structure support to be broken. As it gets broken, stop loss above this resistance. Then what are we waiting on now? After the small pullback, this level of support to be broken. As it's broken, we put our stop loss above this resistance level. And we do that all the way down to the daily level of structure that we point out on our higher time frame. At least this is the way I used to take multiple targets. And guys, I know this is an extremely advanced technique, but we are in the advanced course now. You should have all the knowledge necessary in order to actually implement this in your trading. So as we push down, we're just managing this position on a smaller time frame, moving our stop loss down to the next resistance level, going above that level by our ATR rule that we discussed in the transition phase, and waiting for this market to get to the daily level of major structure that we've pointed out that we're looking at for our second targets. Now, even when we get here, we're not just taking off the second part of that position. At least that's not how I personally do it. You can. There's nothing wrong with doing that, but personally, I like to wait and see if we get some kind of advanced entry reason right here at this daily level of structure. If I don't get any kind of advanced entry reason there, then I will let this position continue to push down until it stops me out above that previous level of resistance. Now, if I get an advanced entry reason here at our daily level of structure, I exit the position. And I'm looking for that advanced entry reason on the hourly chart. So an example of an advanced entry reason would be any of the entry reasons we discussed in the transition phase. If I get any of those at this daily level of structure right here that I was looking at for targets, then that's when I'm going to be exiting the second part of that position. If not, then I'm letting this market ride, and I may point out another daily level of major structure even lower and do the same exact thing, manage the position down to that point and look for an entry reason, unless I'm stopped out, of course, by this market pushing up and hitting my stop loss I'm using, managing the position on the way down. And looking here at our actual trade that we were looking at, as you can see, this market pushed down. We were able to move the stop loss to above here, our previous resistance level. This market pulled back, didn't give us any kind of advanced entry reason here, but once we pulled back down to our level of daily structure, we ended up getting a 1, 2, 3 advanced engulfing entry right here. And I'll zoom that in, guys, just so you can see it a little better. This is the reason we would have exited this trade that we just took a look at, is because of this advanced engulfing entry right here at a previous daily level of structure. So for the second targets on this trade, we would have taken them off on the close of that advanced engulfing entry. So we would be looking at pushing up around 216 pips on that second part of the position based on taking off targets the way I personally do for the pullback strategy and other multiple target strategies that I use. So this is how I personally do it. Again, if that's a little bit too advanced for where you are in your trading, we're going to be discussing other ways to do that in the next couple of videos. This was the most complicated way of taking two targets, but I wanted to go ahead and get it out of the way. Hopefully I explained it in a way that you could completely understand. If not, feel free to send me any questions you have at steven@thetradingchannel.net, and I'll be glad to answer any questions you have. Again, I know this was a very complicated way of taking targets, but this has been the most beneficial for me in my personal trading. In the next videos, we'll talk about taking targets with a fixed secondary target, which is much more simple than doing it this way. But again, it really just depends on your personal trading preferences. So I'll go ahead and end this video here, and I'll see you guys in the next one.